Japan's silent strategy. How Ueda's caution could shape global markets. As the world's financial markets brace for another round of central bank meetings, all eyes are on Japan, and on one man in particular, Kazuo Ueda, the governor of the Bank of Japan, BOJ. Unlike his Western counterparts, who often signaled their next policy moves well in advance, Ueda has chosen silence. He is, as analysts put it, keeping his cards close to his chest. But this silence speaks volumes. 1. The global spotlight on Japan. For decades, the Bank of Japan has maintained an ultra-loose monetary policy, keeping interest rates near zero to stimulate its sluggish economy. However, inflation in Japan has now stayed above the BOJ's 2% target for more than 2 years, forcing markets to wonder, is it finally time for Japan to tighten its policy? If the BOJ raises rates or adjusts its yield curve control framework, it would be Japan's biggest policy shift in decades, a move that could reshape global currency flows, bond markets, and trade dynamics. 2. Why Ueda's silence matters. When a central bank governor like Ueda avoids giving clear signals before a meeting, it creates strategic uncertainty. Investors, traders, and even governments begin to guess. Will Japan end its era of negative interest rates? Will the yen strengthen sharply if policy tightens? Or is the BOJ waiting for more data before acting? This ambiguity keeps markets cautious, and that's exactly what Ueda wants. By withholding hints, he prevents speculative attacks on the yen and avoids sudden capital shifts that could destabilize Japan's fragile recovery. 3. The yen at the center of global trade. The Japanese yen isn't just a domestic currency, it's a global trade barometer. A stronger yen makes Japanese exports, cars, electronics, machinery, more expensive abroad, while a weaker yen boosts export competitiveness but raises import costs. Thus, Japan's monetary decisions ripple far beyond its borders. China and South Korea watch closely, as their exports compete directly with Japan's. The US and Europe track yen movements to assess global demand trends. Emerging markets feel the impact through changes in global liquidity and investor behavior. In short, Japan's monetary silence influences everyone, from Tokyo traders to textile exporters in Southeast Asia. 4. The global trade implications. If the BOJ tightens policy, the yen will likely strengthen. Japanese exports could slow, while imports become cheaper. Global bond yields may rise as Japanese investors bring money home. If the BOJ stays dovish, the yen may weaken further. Exporters will benefit, but inflationary pressures could rise globally. Carry traders may continue borrowing in yen to invest in higher-yielding currencies, fueling global liquidity. Either scenario holds significant consequences for global trade flows, currency stability, and commodity prices. 5. Why the world should pay attention. Central bank decisions are no longer domestic matters. In a world of interconnected finance, what happens in Tokyo can echo in New York, London, and Shanghai. Ueda's cautious communication strategy is not just a Japanese story, it's a lesson in global monetary diplomacy. His quiet game may determine whether global markets remain stable or face another wave of volatility. Conclusion: the power of silence. Kazuo Ueda's silence is strategic, not indecisive. By keeping his cards close to his chest, he's maintaining balance between inflation control, currency stability, and market confidence. Sometimes, in global economics, what isn't said matters more than what is.